and you're watching Investor's Guide, a show where we simplify everything to do with personal finance and help you learn how to manage your money. Now, over the last few episodes, we've been talking specifically about mutual funds. It's one of the easiest way, especially when you're at the beginning of your financial planning journey. And today we are going to focus specifically on equity mutual funds. And joining me is Feroze Azeez of Anand Rathee Wealth Management. Feroze, thank you so much for joining us on Investor's Guide. So today we're going to sort of put the focus on equity funds and so understand how they work and who should really be investing in them. So let's start first with the different, largely the most common equity funds that are there, that are available today, which is large cap, mid cap, small cap, multi cap. These are the various kinds of funds that are there. If you can just quickly first take us through the categorization of these funds, and then we'll get to the second part.
Yes, Avni, they categorize on the basis of the companies they invest in. Firstly, an equity mutual fund is the one which invests in stocks. Stocks, by which I mean shares. So a mutual fund which invests predominantly in stocks is called an equity mutual fund. And in those, there are subclasses or categorizations. Depending on what sizes of the companies they invest in, how many companies does each of these funds invest in? So the classification is on different methods. The most popular classification is on the size of the companies they invest in. So if they invest in very big companies, the top 100 of this country, which are listed, then those are called large cap funds. If they invest in the subsequent 150 stocks, which is 100 to 250, then they're called the mid cap. So you have the large cap, you have the mid cap, you have the small cap, and then you have the multi cap. So you have different mutual funds depending on the sizes of the companies they invest in.
Right. So when we talk about large cap funds, essentially we are saying that these particular funds invest in the perhaps what we can say is the top 100 companies of India where these funds put in the money. So for a new investor, for example, if somebody feels that yes, the Indian stock market is going to rise and you are bullish on the India growth story, so to speak, then you perhaps can just park your money into large cap funds and wait it out for a long period of time, because the other part to also remember is whenever you're investing in equity funds, you have to remain invested for the long term. It's not something you can put and expect returns in 1 or 2 years. You have to wait it out for at least 5 to 7 years at the very minimum phase.
Yes, Avni. I think, like you said, the large cap fund, which invests in the top 100 listed companies as per their size or their value, which is called capitalization, is called a large cap fund. And the fund is mandated to have 80% of the money you entrust that fund into these top 100 companies. It has a provision of 20% being invested elsewhere in other companies, but top 100 would constitute at a point in time 80% of the total money you've invested. So that's point one. Point two, like you said, Avni, these investments actually fructify and give you the desired result only if held for long periods of time. And long periods of time, if I have to put a number to it, should supersede 5 years. And that's exactly when you will be able to realize the benefit of having invested for that long. Thirdly, you should always consider that as an investment and not as a parking, but it's a very, very good beginner's tool because there is not so much of risk as much as the other categories could have. This would be the least risk in the equity mutual fund bracket. So it's a beginner's boon to my mind.
Right. And even that can sort of further be broken down, because equity funds, something that beginners can start investing in, especially if you start putting in money on a systematic investment plan basis every month, sort of putting in some amount of money to help you space out your investments as well. But even within that, depending on the kind of risk you want to take, depending on how much of a beginner you are, you can choose between, either the large cap and multi-cap funds, which have a slightly lesser amount of risk component, or you could choose the mid and small cap, where the risk component is that much higher, but the possibility of higher returns also goes up.
Yes, Avni. So for a beginner, if the first investment has to be made, a large cap could be a great start. but anybody who has a savings of greater than 1,000 rupees, maybe a 3,000 rupees a month, will have to or will be benefited if he ventures out beyond a large cap fund, like you rightly pointed out. So there are other schemes, other categories as well. Mid cap as a standalone category, if you have to first see that, 65% of the money you entrust that scheme will be invested from the 101st company as per the value of that company in the listed market to the 250th. So the subsequent 150 beyond the first 100 are called the mid-cap stocks. And the scheme which invests 65% of its money in these is called a mid-cap.
Right. So, Feroze, the other question here, of course, is that let's assume that I have 6,000 rupees that I have decided that I want to invest into equity mutual funds on a monthly basis. And I'm a novice investor. I'm a first-time investor. What should my strategy be in choosing between these different categories of equity funds when I want to put in my money?
Avni, the step one is to look at an investment which is diversified. All the four categories, the top four categories, which are very critical to my mind, are large cap, mid cap, small cap, and the multi cap. The multi cap scheme is the one which has the freedom to invest in all the broader spectrum of any kind of market size. So that's why the name suggests multi-cap. So it can invest large cap stocks, mid cap stocks, and small cap stocks. So these are the four categories which will have immense emphasis. Ideally, to my mind, you can choose one from each category, the best one, as per your analysis. And if you ask me, two multi-cap schemes, a 5 mutual fund portfolio is what I would recommend to create. If you buy yourself 5 mutual funds in these four categories, automatically you would be investing in not 5 mutual funds only, but if you look at it, you would be investing in 150 to 200 different companies. So your money is spread across a very large basket of stocks. Some of them will do well, some of them will do badly. Hence, there will be a portfolio which is balanced and the risk would be reduced dramatically. So that would be the broader strategy of the money which you have as your disposable income on a monthly basis.
All right, Feroze, we'll leave it there as far as equity mutual funds are concerned. There's still lots more to discuss about how you should go about choosing which funds to invest in, and we'll get all of that down over the next few episodes. But thank you so much for tuning in to this episode. And on the next episode, we're going to be talking about debt funds, understand the various categories and how they fit your investment portfolio. Thank you for watching.